Bitcoin is currently sitting on the edge of a cliff. What will be the next immediate move for Bitcoin? How are the macro charts shaping up? And what impact will the interest rate hike have this week? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having excellent starts to the week. We're here today to take a look at Bitcoin on the smaller time frame, discussing the next immediate move from a technical and structural perspective, from a macro perspective, discussing the current horizontal support level and the fact that Bitcoin is retesting and potentially falling below a major cliff. We're also going to be talking about the upcoming interest rates and economic data that has the potential to completely shift the economic perspective for the direction of assets. Before we get into it, smash your like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, data, technical and structural information, relevant news events, and everything in between. No hype, no BS, no emotion, pure raw TA. As we can see, a lot is happening on the charts right now. Bitcoin is currently pushing below that 29.8k support, an incredibly significant level of support on the short-term charts. To top that off, the higher time frame is starting to look a little bit weak, and we only have about 7 days until the monthly candle close. So we are in a little bit of a tight squeeze spot over here, a little bit of a position where Bitcoin could go either way, and of course the movement on either of these directions are going to be significant. If we break past 32,000, that is going to be a significant breakout. If we drop below 29.8 and start closing candles under and start pushing towards 28.4 and lose 28.4, that is going to be a significant blow for the bulls. But before we get into anything else, guys, let's go ahead and take a look at the market data. And before we do that, go ahead and join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the overall market. If you're interested in joining our VIP channel, we post trading signals with exact entries, exact targets, exact stop losses, and trade justification. You can join not only this channel here, but of course our group chat as well, with all of our members trading, learning, developing their skills on a daily basis. All you need to do is go to the free channel, click the pinned comments, find this message, and contact me. All membership details can be found here. Let's get into the market data. Starting off with the market data, the 24-hour volume is up 16.97%. Not too high, not too low. Of course, it is Sunday night for America right now, and it is Monday morning in Australia. We're sitting at 49 billion for the 24-hour volume period. For 24-hour liquidations, we are up 12.19%, sitting at 52 million. So slightly on the rise, and we do generally see liquidations rise as volatility increases. And over the last 24 hours, we have seen a decent amount of volatility. We saw the price chop all the way upwards from our support level into that major POC resistance. We said in yesterday's video, if the bulls want to reclaim control on the small time frame, they are going to have to break the price above the POC level and these local high points of the prior candles. We saw a perfect rejection from that point. If you took shorts in there, congratulations. Now would be the time to take profit as we deviate underneath this current support. But as we can see, a strong rejection from that point, pushing the price all the way down to this deviation below 29.8. Now it's too soon to say for sure whether or not we're going to bounce or continue down, but we are at a massive risk while we do remain underneath this 29.8k level. And in today's video, we're going to be showing you and discussing from a technical and structural basis what this means for the next move and what this means for the higher time frame price action. Let's go ahead and take a look at some of the market data and of course the DXY. The DXY is now consolidating quite decently. We recently lost a 470-day long support level, which was a range between around 108 to around 101.5. You can see this is a 469-day long resistance now, a level of which we are currently retesting on the chart. Prior to that, we bounced from a major support sitting just underneath that $100 level. A very important level to hold, and if we do lose this level, it will result in a strong move down for the DXY. Until then, we do still have this downward trending resistance when, if broken, will result in an overall reversal for the DXY, allowing the DXY to push potentially past 105 and back upwards. What the DXY does this week will be heavily determined on the upcoming interest rates. As we know, in 2 days and 15 hours, we do have the next FOMC meeting. We do have that next interest rate hike. And at the moment, the probabilities are massively in favor of a 25 basis point hike, sitting at 99.8%. Now, here is the thing. If the interest rate hike is expected, it is likely going to be priced in, and therefore the initial news release is unlikely to have as significant of a result to the market in terms of overall volatility and direction than if we saw a result which was unexpected. However, raising interest rates as a whole is negative for the asset market. It increases the overall risk in the market, particularly if we expect future rate hikes. The overall perceived systematic risk will increase, and as a result, the DXY to fall. So when we see the interest rate hike decision, it's going to be more important to pay attention to the meeting that they have after the interest rates to discuss what their future intentions are, as that is going to set the narrative and context for the next month of price action. That will determine whether or not the markets are going to see a little bit of a blip and continue upwards, or likely see a little bit of a stronger correction and then eventually continue either upwards or downwards. So pay attention to all of that stuff. Let's go ahead, guys, and jump into the traditional markets and then get into Bitcoin. As we can see, the S&P 500 is deviating above. It has now broken back underneath that uptrending resistance. We don't really expect too much, guys, this week for the S&P 500 until the interest rate hike, so watch out for that. Looking at the Dow Jones, exactly the same thing, guys. Some awesome progress on both these markets since October. We saw a strong rally upwards and a nice strong uptrend. These uptrends for the Dow Jones and S&P 500 will remain intact. These are our uptrending lines. These levels remain intact until they are lost, and therefore any correction that occurs should be considered a healthy correction in an uptrend until those levels are lost. So watch out for that. Let's go ahead and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So starting on Bitcoin's chart, we're going to go ahead and take a look at the macro charts first and foremost, and then we're going to break it down daily, hourly, smaller time frame, immediate price action. So on the monthly chart, we can see this is our 4-year cycle. The 4-year cycle represents a date range trend. That is all it is. It represents a certain date range trend between our length in terms of our monthly date range between bear markets, consolidations, recoveries, and bull markets. As we can see, the key levels on our monthly charts are represented by our horizontal levels, which are our horizontal red lines, and our dotted levels, which are our dotted horizontal lines. These two levels represent two things. Number one, a flip between weekly and macro bullish, and a flip between macro bullish and the initial starting of the bull market. Okay, so if we take a look at the current price action, we can see the price action is going to be closing out another monthly candle in about 7 days. It is incredibly important. This monthly candle remains and closes above 30,000, as the $30,000 level was closed prior in the prior candle. If we fail to close a monthly candle above 30,000, it will suggest that this could potentially be deviation above 30,000 and could result in a move toward the downside. This is something we are paying attention to. This is something we are watching closely. As we can see, every single time we break above that monthly level on the monthly candle, we do generally continue toward the upside being the dotted trend line target. The dotted trend line target in this instance will be 48,000. The dotted trend line is taken from the dead cat bounce high point of the prior bear run cycle. You can see in this instance, it's around 46 to 48,000. Now you're probably thinking, Whale, you said we can't close below 30,000, but back in 2015, we saw an instance where we closed. We actually broke above over here perfectly, and then we closed underneath. What about that scenario? And this is where the weekly chart comes into absolute importance. If we look at the weekly chart, in that scenario, even though we broke above, we never closed back below that Gaussian channel level. So if we look at where that candle broke above, which was over here, the Gaussian channel had already been broken on the weekly, and we did not come back down and break below the upper band of the Gaussian channel. So the Gaussian channel represents a shift in macro strength and direction. In this instance, if we do not break a candle and close a candle above 30,000, the next key level of support is going to be the 28.4 or the upper band of that Gaussian channel. We have never once seen that level lost until only after we have reached a dotted trend line. I'll give you the instance in 2019. We broke above the Gaussian channel weekly as we broke the monthly candle above. Only after we reached that dotted trend line, we came back under. So we are watching for the same scenario to play out this time. It is not guaranteed to occur, but it is something that we have seen in the past. And if we're looking at the current data, we could potentially expect that same thing to occur. Either way, the key levels are the key levels. If we eliminate all ideas of fractional based price action, if we eliminate all ideas of price action exactly replicating what we have seen before, the structural levels that we're looking at, these horizontal levels, are still going to be significant. So we still need to break above these levels. We still need to get closes above these levels to continue in those directions. Let's go ahead and break it down to a weekly and daily chart. As we can see, Bitcoin is currently in an overall uptrend. This chart represents two things: our key horizontal levels and our key overall trend. Our trend is represented by this uptrending black trend line. No surprise, it's called a trend line. It is our diagonal level. This represents a overall trajectory of price action, but more importantly, also represents a trigger point. If lost, will signify the shift between an uptrend and a downtrend officially. We can start downtrends, such as over here, well before we break these levels. That is what we call a reversal trend or a downtrend within a overall higher time frame uptrend. But if we're looking at the daily and weekly trend, for the weekly and daily trend to be lost, we do need to be looking specifically for that weekly trend to be lost, that level break. So if that level does break, we enter a high time frame downtrend. Would be very, very bearish, would not be a very good thing. But what does that mean for the current pricing? That means no matter what happens to the current price action, while we remain above this level, the overall weekly uptrend is still intact, and therefore you shouldn't be overly bearish on the chart. So you can be bearish on a smaller time frame. I've been bearish from this point. I've been bearish from this point. I took some more longs at this point over here. I sold those longs back off in this range. I've been scalp trading ever since. But you can be bearish over here expecting a pullback, but do not be overly bearish expecting the price go down to like 15,000. Until we have the data to suggest. If you want to take your shorts and put your stops above this level, or put your stops above that 30,400 and just keep loading those shorts, letting those run, letting them run. If we drop below those levels, we keep those open and then you turn those into weekly swings, you can do that. But to expect something to occur before we have the data to suggest it will occur is nothing more than speculative and potentially emotional trading. So wait for the data to suggest and then follow the data. Now, following the data is not following the price. We have to understand that. The price action is a representation of what is happening between buyers and sellers, but it doesn't show us the overall strength of price action or the overall drivers of that price action itself. We have to look at what's happening in momentum. We have to look at what's happening to volume. We have to look what is happening to open interest. We have to see what the buyers and sellers are doing on the data perspective to see the strength of price action and thus the probabilities of particular moves for Bitcoin. So I'm going to go ahead and reiterate one more thing. Uptrend is intact. This uptrending trend line is incredibly important. Now, If we do retest this uptrending trend line, there is going to be a very high chance this level will be lost. And the reason being is because to retest this uptrending trend line, we will have to have lost the major 28k level, the major 28.4k level, which of course which we just said already, which was the upper channel of the Gaussian channel line over here, which would signify a huge shift in bearish momentum, strong enough to potentially push the price back underneath that uptrending support level. So keep your eyes on those levels, guys. It is an incredibly important time for Bitcoin, but if we still have this move, we still have, a lot of room to move downwards. Looking at the bullish perspective, guys, we need to break well above 32,000 over here, guys, to enter this VRPV gap. We can see in prior data, we have seen a huge amount of volatility in this range. This volatility generally extends over, and we can see that represents an area of low historical trading orders or low resistance. If we have an area of low resistance, we require lower amounts of volume to push through at a greater velocity, and the price is likely to increase in speed as it moves through this range. And therefore, we can say if we break 32k, that is a trigger for the next macro bullish move, or the next move for Bitcoin, which has a chance to take us up to 38 to 40,000. So when I say Bitcoin's on the edge of a cliff, we are on the edge of a cliff right now because we are currently retesting a very important horizontal support level of the current price range. Everything we have discussed before this point right now in the video is solely going to be dependent on what happens on the smaller time frame. The smaller time frame determines where the price goes on the higher time frames, okay? To a reasonable extent. Of course, if we're looking at macro charts, someone's going to constantly say, MegaWhale, wrong. Yes, I know, on the macro scale, we have economic drivers, we have political drivers, we have social drivers. There are things other than technical data and price action and stuff that pushes price action. It's just this is just a representation of what's happening in the markets. So we're not going to go to that extent. We'll talk about that another day. But we'll look at the current price action. We can still identify points of which buyers and sellers will become weaker and stronger, and therefore areas in which the price is more likely to move through or move upwards from. And this is one of those scenarios. We're currently retesting a huge level of support. I've gone ahead and drawn it out on the VRPV over here. We can see the moment we lose this around 29.6k level, and that level has been pushed down over the last few weeks, right? We initially saw that level around 29.8. We lost that. We saw some liquidity grabs below. We've pushed up, and we've kind of consolidated between this range again, creating yet again another horizontal channel or another consolidation range. The low point of this immediate consolidation is going to be this red line. We can see the red line because we've had candles close above that level. We've had that holding of that level where the VRPV suggesting the level is an area of liquidity, and anything below is this gap in the VRPV suggesting volatility and volume will increase. And therefore, if we lose this level, we do expect one of two things. Number one, a sharp but fast correction for Bitcoin, a liquidity grab toward the downside, and the price will bounce back in. And the reason it could do that is because the market could be waiting for the interest rate decision. Or number two, disregard of that and we'll just shoot all the way down to around 29.2k. 29.2k is going to be that area of support between 29 to 29.2. We expect volume and volatility to start drying up around that level and potential sideways consolidation to occur. If we lose that level and go lower, we're looking at that 28.4 to 28.2k level. That yet again is going to be the local high points of these highs in the prior consolidations around March to June. Around May to June, in 2023. And of course, it is going to be that high point for that Gaussian channel chart, that upper band level. So an incredibly important level. If those levels are lost, we're very likely to move lower toward the uptrending support level. So let's take a look, guys, at the immediate time frame. And really quickly, I want to go ahead and say the charts are still bearish, right? The short term is bearish. There's nothing to contest that yet. And I think right now you can look at the immediate time frame and say, oh, 5-minute chart's bullish, or I expect to bounce on the 5-minute chart. Awesome, cool. It doesn't really matter what you say, and it doesn't really matter what you think. The data's telling us right now we have significant resistance sitting around this level. And for the bulls to push the price up And we're not talking about up on a small time frame like this. We're not talking about up to there. We're talking about up, you know, we're talking really up over here, up to like 31.3. We're talking push to 32. Before we can consider that move to occur, we need to get above 30,350, 30,400-ish, this horizontal resistance range. If this range is broken, then the bulls have a chance to actually push the price back up and clear this range over here into this next resistance level. And that will need to be done if we want to see the price push back into 32, break over 32, and continue upwards. Until then, we are underneath that resistance point. We are getting rejected. I would not be sitting here saying, okay, I am going to short right now. If you look at a chart saying, I'm shorting right now, it's a big red candle, I'm going to go short, I'm going to make a shitload of profit. You're doing it wrong, guys. It could correct massively, but your best short entries are in these liquidity levels, these areas of resistance. If you're front running, or if you're chasing the market, the risk return is not on your side. So watch what happens, guys. If we do lose this level, you could expect a correction, but I wouldn't be aggressively hedging shorts right now. Those should have already been done. We've been telling you for weeks now, guys. We've been telling you for days and days and days that we expect the price to move down. It's bearish, blah, 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 blah. We don't expect the price to move upwards until 30,400 is broken. You should have already positioned yourself if you're interested in doing that. But let's take a look at the immediate time frame price action. What is exactly happening on the charts? So, very choppy, very messy, pretty much all over the place. So when this happens, I don't really like to look too much at the price action. The price charts can be deceiving. I like to take a look at our metrics and really get an understanding of what is happening behind the scenes of this price action and, you know, what the data is suggesting. So as we can see, we have our overall structure over here. We have a downtrending resistance level on that RSI. This is our downtrending resistance. In fact, if we zoom out, this will represent a bearish divergence as we have, you can see, higher peaks over here. And of course, our lower peak over here. This, of course, is a bearish divergence. It represents weakness in that structure, a discrepancy between price action and, of course, momentum. So we do have this overall downward pressure as we move through. For the price to push upwards, we do need to push above that downward pressure and break upwards over here. From the bullish perspective, I would like to say the open interest is not falling as much. We do still have a decent level of support on the open interest over here, which indicates people are still attempting to put some longs in this level, right? We can see people are still longing these drops. They're still putting longs in these drops over here, which tells us one or two things. Taking longs at this level wouldn't be a terrible idea with very, very tight stop losses, but if the price drops below, we could see a long squeeze toward the downside. If we take a look at the CVD over here, we can see the CVD has increased. That is expected, as we have seen a massive, massive, massive red candle, which is, well, not massive, massive, but it's quite large, right? And over the last few days, in terms of Bitcoin's price action, it's relatively large. We have seen overall volume increase, whether that be bearish volume or bullish volume, the volume has still increased. Moving down to the hourly chart, let's take a look at what's happening. So we can see the CVD is bouncing over here. We can see the open interest is bouncing. We can look at the momentum on the lower side and see what is happening. So this is tricky because there is a lot of volatility and there is a lot of chop going on. So we're going to go ahead and draw some lines over here on these wicks and take a look at what we can see. These are our overall low points, and we can see it kind of merges up to around 29.6. And we can say that if we lose this level, we do expect that correction to continue. If we take a look at these particular points on the RSI and draw our horizontal levels across, these can act as trigger points for the next move for Bitcoin or shifts in momentum. These shifts in momentum do not have to occur on a diagonal scale. They can also occur on a horizontal scale. So we can see momentum over here has not fallen just enough yet to actually consider that correction down from this level will actually occur immediately. We have to see momentum drop still just a little bit more. This could indicate on a smaller time frame we are attempting to bounce, which what it does actually look like that. Or we could actually see a bounce develop. Let's take a look at the 5-minute chart. We can draw some trend lines on the RSI. These will represent momentum shifts. We can see the momentum is still very much negative. We are moving down, but we are consolidating. So we do have a decent amount of consolidation over here in the momentum, although the price has been moving downwards, right? So we have the price moving downwards over here, and we have momentum kind of consolidating. This could represent an attempt of a bounce or an attempt of consolidation. These are indications or points of which I would generally try to long from with very, very tight stop losses, as these could develop into bounces. You can see open interest is rising. People are starting to try buy this dip. As for our CVD, we don't see any indications of a bounce yet. The CVD is still falling, which is not a very good indication. Let's take a look at a 10-minute chart and see what we can see. So, hypothetically, let's assume we will bounce from this level, as we do have a potential support around at this point. Let's say we bounce from this level. Where could Bitcoin go on a smaller time frame? We're looking for these local high points over here and local low points of prior levels. So the key level of resistance is going to be this 29.85 level. If we break above 29.85, we're likely to push back above into this higher segment of price action around 30 to around 30.3. So right now, if you're looking to take very high risk longs, you can attempt that. You can attempt a very high risk long, but do not keep your stop loss loose, keep it tight, manage your positions. Remember, we have economic data coming up this week. We have a lot of news events. The high impact news is going to shift, stir, and shake the market. You do not want to be caught on the wrong side of it, and you do not want to be over trading. The market is not going anywhere, guys. The market's not going anywhere, but your money can, okay? So focus on preserving your capital in periods of uncertainty, indecision, and volatility. There is absolutely no rush. You do not need to trade every move, and you definitely do not need to have money in a trade at all times. Thanks for watching. I hope you enjoyed, and I'll catch you guys in tomorrow's video as we discuss it in more detail. Cheers.